All right, Aurora. With all the craziness going on in the insurance market in California, I know our clients, consumers, and just people in the community uh, have a lot of questions, a lot of uncertainty, and I know there's a lot of misinformation going on out there on what's going on with the insurance industry, why carriers are doing certain things. I know I have these discussions all the time. I'm sure you have them throughout the day as well. So I think it's important that maybe you and I just chat a little bit on what's going on in the industry for the consumers, because it's such an important time for them to, just get this information so they have a better understanding of what's going on. So obviously, last 3 or 4 years, the industry has been changing quite drastically in California. Insurance carriers have been shifting their market segments around. People have seen a huge increase both in home, auto insurance, really all their insurance lines. And now, over the last 12 months, there's been a huge uptick in carriers not writing policies, carriers non-renewing people. So I see it all over social media as well. So I think it's just important that we talk. And I know being at the forefront with legislation and things of that sort, would be a huge resource for our clients to discuss this. So, just give a little background on what's going on, why we're seeing such a huge cost of insurance, why carriers are pulling out of the marketplace or freezing in the marketplace, and just give a general information on what's going on there.
Oh. Well, I mean, the biggest piece of it is the insurance companies just aren't making money anymore. So they have lost years and years of underwriting profits due to the fires, on top of claims increasing, and the cost of supplies and the cost of repairs and everything else has just made it for a very volatile market for the insurance companies. One of the biggest things that keeps them from coming back into the market is not being able to take enough rate in the areas that are needed. So the way that the structuring works is they can take so much of an insurance increase per quarter in the state of California under Prop 103. 6.9% is the most that they can take without having to go to public hearing. And so what that means is that's a base rate. So it says that in some areas, the premium might go down, but in other higher risk areas, it can go up substantially. And so with them not being able to take enough rate in the areas that they need to, it kind of increases rates and causes just this inflation in insurance costs all the way across California. So what happens is that if they can't take enough rate, then they have to choose to stop taking policies. And that is where we are at in the marketplace right now. So State Farm being the biggest one, as you guys know, they have stopped writing new business in California for nearly anything property based. Farmers is limiting the amount of policies. We have other companies like Hippo Insurance, American Modern High Fire Insurance, Guard Insurance. These companies have also decided to cease writing any new business. And in a lot of cases, they are just going to non-renew their entire client portfolio because they can't take the rate that is needed to make them profitable.
Yeah, it's a lot going on, and I know daily right now, carriers are continuing to shift their rules, their limitations, and really their guidelines. So, from a consumer standpoint, what's the best way to navigate this, prepare themselves for this, especially if they're getting that non-renewal letter or they're having to go out in the marketplace and secure new insurance on a purchase? What's some advice that you would give them to really prepare them for going down that avenue?
There's a lot more that you're going to have to do to get a quote than you ever did previously. A lot of carriers are not offering any insurance whatsoever unless you package it. So a lot of people who, really love having their auto with USAA, or they've had their auto with Geico and they're paying, a very low premium for some of those things. If you're wanting to, then if you get non-renewed and you're trying to go to a new company, you're going to continue to limit the options that may be available for you out there if you continue to separate out those two policies. Now more than ever, the benefit of packaging everything that you possibly can is very important. The other thing is defensible space. So defensible space has really only been talked about here in the mountain regions,
Hmm.
but we now have in the regular suburban areas, the insurance companies are sending out the same letter saying that you have to have that first 5 foot of defensible space, nothing flammable within 5 feet of the home. then you can't, for the first 30 feet, you can't have anything flammable structure wise that is going to be within that distance to your home. No trees over the roof lines, boxed eaves, wildfire vents, gutter guards. So all of those things are going to have to be very prevalent in your mindset as you're moving forward. And if you have the funds, which I know a lot of people don't, your best bet is to actually start asking for information in regards to firewise standards, ways that you can harden your home to make you more attractive to insurance companies moving forward.
Yeah, that's what I have to share with people is the whole consumer experience has drastically shifted over the last 3 months or so. I mean, you could just tell on TV anymore. We're not seeing the Geico 15-minute for 15% savings anymore. It's not about speed, speed, speed. They're not spending millions of dollars to market to that because that's gone. You know, the idea of calling and getting an auto quote in 15 minutes and binding that policy right then and there. You know, the expectations are shift a little bit. And like you said, it's really packaging that insurance and bringing it all together. That's what the carriers are requiring in a lot of cases. So it's from a consumer standpoint, the expectations have shifted and that buying process has drastically changed. Let's
Yes.
talk about
In
the fair
fact,
plan briefly. Oh, go ahead. Sorry.
well, I was going to say, I mean, you also have to keep in mind insurance companies are not writing what we call same day policies. So it
Correct.
used to be if you didn't have insurance and you're going to buy a new car, you could call from the dealership. Most of these companies have a 10-day hold before we can even bind an insurance policy for
Yep.
you on autos. So it's very important that you're very proactive if you think you're going to be buying a car and you know it and it's on order. You know, Teslas are a very common thing that we get, you know, at the last minute, I need to go pick up my Tesla, but you knew, you know, like you had to order it. So the more information and the more time you give yourself with that is very important right now.
Yeah. No, that's very good advice. Let's touch on the fair plan, the California fair plan. You know, a few years ago, it was very little known by most consumers. Um, but now it is a staple in the state of California. It seems like it's in the news every single day. It's getting bombarded with policies and saturation throughout the state. And I know you are, you know, really involved with the Fair Plan and their team there. So, did you want to share any updates on the Fair Plan or any rate increases or anything that we might be seeing there?
Well, we don't have all the finals yet, but it does look pretty clear that the rate increase is going to happen in December.
Okay.
Along with the rate increase, there is going to be some underwriting changes that occur in regards to kind of what you need to do to actually achieve and get a California Fair Plan. There are new wildfire discounts that are out there. Again, it circles back to that firewise status. If you
Hmm.
hit all these metrics, you can get up to 14.5% discount off of your California Fair Plan. And then you can get an additional about, it's 10%, but it works out to be about 5% of the total policy premium if you are in a Firewise community. So all in all, if you're Firewise and you hit all those matrix, you can save up to 20% off of the California Fair Plan, which can be quite impactful
Sure.
for a lot of people that are there. The time period as you're going through you know, if you get a non-renewal, you're getting your non-renewal 75 days in advance. Which can be very frustrating because then you call an insurance agent and we're like, well, yes, we know that you're non-renewing and we're getting there. Unfortunately, the guidelines with California Fair Plan, we can't submit an application or get anything over to them until you're within 30 days of your renewal period. That's very similar with other insurance companies as well. But with the California Fair Plan, it has to be within that 30-day window. And then on top of that, you want to make sure you get that in like almost as soon as you can, especially if you have an escrow and you don't want to come out of pocket for the 40% down payment. We need at the minimum 2 business weeks to be able to bill your mortgage and make sure that they send out the money
Hmm.
so that we can get that new policy initiated for you.
Yeah, those yeah, that process can be pretty timely. So it's important that you're getting ahead of the game and addressing it. I do also like to say, and I think you could touch on this a little bit. This is where agent knowledge and coverage knowledge comes into play here because you and I see all the time agents in the past that have written zero fair plans, but now because their carriers have restricted them so much, they're transitioning into writing the fair plan. And they're just not fully aware of the policy, the coverages. We're seeing so much gaps in coverage. We're seeing so many homes almost fraudulently underinsured, I would like to say. So from a consumer standpoint, it is so important to be working with an agent that understands the fair plan, understands the coverages, so the policy is going to perform how you would hope and expect it to. Would you agree?
Absolutely. And I want to touch on some of the biggest misnomers that are out there that are really impacting people. Because California Fair Plan has been prevalent here in California, we've unfortunately gone through several claims scenarios. And as a person that works with California Fair Plan, a lot of people reach out to me to say, hey, they're denying this claim or they're doing that wrong. And most of the time it's not wrong. It's a very simple contract with the California Fair Plan. But what is being told out there, some of the biggest misinformation is it's okay to have a $20,000 deductible because California Fair Plan is only covering you for wildfire. Everything else that you have is going to be what your difference in conditions deductible is. And unfortunately, that's not correct. Fire is fire here in California. So whether it's wildfire or a kitchen fire or an electrical fire, whatever it may be, you're then taking on and absorbing that $20,000 deductible. If you have a wind or hail loss, that is also California Fair Plan, and it blows off roof shingles or a portion of your roof, you're absorbing
Mm-hmm.
$20,000 of that claim. Others are that your other structures don't need to be covered. If you have any sort of like heating device, if you've got a wood stove, if you have a kiln, if you have a regular cooking stove, you need an entire other policy for California Fair Plan, or they can deny that claim, and they will deny the claim. We saw it during Caldor and some of these other fires. And then the other is really fair rental value, telling people, well, you don't rent out your home, therefore you don't need fair rental value. Fair rental value is what's going to keep you in your home. Be able to pay for something if you can't stay in your home. So this is where most people end up losing their house. So they can't pay the mortgage and pay someplace else to rent. So those are the biggest gaps that we're seeing out there right now in the California Fair Plan, when it's being written by agents that just don't understand what it's geared for.
Absolutely. So it's really important that you are working with a professional that understands the coverages and policies. I like to always stress that to all consumers or people in the community when we're talking about this. Another area that's I see a lot of conversation about or frustration about from the consumer is just the rise of insurance costs. So, for the last couple of years, it's always been the fair plan. Oh my gosh, it's so expensive. I don't want to go on the fair plan. But what we're seeing now is insurance costs rising pretty drastically across the board for the 3 bedroom, 2 bath house in West Roseville or in the suburbs. So do you want to touch on that? Because we're seeing, rate increases there across the board, through the whole state.
Yeah, kind of as explained a little bit earlier, there is due to Prop 103, and California is one of the few states that doesn't allow what's called reinsurance pricing or catastrophe modeling to be applied. And so when you can't apply the correct risk to a home, therefore you have to then raise the risk against
Mm,
everybody else. So in a lot of cases, you have to raise the cost in Sacramento to compensate for where you can't raise it enough in the mountain areas. And so that's what we're seeing is just this total increase for homeowners insurance. And likewise for auto insurance,
yeah,
we have risen claims, more expensive claims. The more sophisticated a car gets, the more costly it is to repair it because you have to deal with all the electronics. Parts are in short supply across the United States. So all of those things increase the cost of claims, increase the cost that insurance companies have to rise to meet that what's going out the door. So we're going to continue to see that happening. So what was again traditionally like $100 a month in suburban areas now quickly becoming $200 a
yep.
month, and it's going to continue to rise everywhere in California.
Absolutely. I always share that, like auto insurance, people are wondering why insurance is increasing so much. And I, say fender benders, 10, 15 years ago were six, 700, $800 fix. Nowadays, with all technology, sensors in the bumper, I've seen agents, insurance companies, total cars. off simple fender benders. You're thinking, oh, this is not going to be that big of a deal. Yeah, they're just totaling out the whole car because it's that expensive to repair with all this technology that you're seeing in these cars. That it's going to continue to go down that path with the technology that these car companies are putting in there. So that's a simple analogy just to see really where this market's going. I think it's important. What other areas are also being affected in insurance?
I mean, it's really anything that needs insurance. Landlord dwelling policies are nearly impossible to get coverage for. 6 months ago, we could go to any insurance company and get that. We are down to two options left in the marketplace, and then the California Fair Plan. So
Mm-hmm.
that really impacts it. There are some that will open up a little bit if you bring your home and your auto insurance over and package it, but it's still very, very hard to get that coverage out there. Um, Toys, like RVs, boats, all of those things, those costs have risen out there. Less and less companies are offering coverage because those are the things that get left behind. So when we see wildfires happen, you're grabbing your car, you're grabbing your belongings, but your RV in a lot of cases, trailers, motorcycles, boats, those are the things that get left behind because you're
Yep.
trying to rush out of there. So the cost for all of those things have gone up drastically. And then the other thing that we're really seeing out there is claims satisfaction. So as insurance companies are trimming the fat and trying to bring costs down, that leaves less people that are there to actually work through a claim with you. On top of the fact that there are less and less body shops and work and parts coming through. So all those things become very frustrating. So one of the things that everybody should be very aware of and ways that you can help yourself is rental car reimbursement is a very big issue right now because what used to take 2 weeks to fix a car, we're seeing with part delays up to 3, sometimes 6 months to get a
Yeah.
car. You have 30 days worth of rental car coverage. Anything past that 30 days, regardless if your car is not done or if it's within your control, you're coming out of pocket. So one of the things that I would highly suggest to anybody, if your car is drivable, you want to drive that car until that shop that's done the assessment has everything in there so that all they have to do is go and fix your car so you're not coming out of pocket for those daily rentals. So this kind
Yeah.
of thing is encompassing and just causing kind of a domino downgrade to insurance just in general across the nation. This isn't just happening in California. That's what
Correct.
we're focused on, but
Yeah.
this is happening nationwide with companies, and the same companies that are offering not to do coverage here are being very limited or pulling out of other states as well right now.
Absolutely. And that's what I like to, when I having these discussions with people, because the first thought is, and I understand it from the outside is, man, these people are just, trying to take all the profits they can and really just trying to, hurt us. And that's not the case. I mean, these carriers are trying to stay in the state of California. They're losing a substantial amount of money right now in the current environment. I was looking at statistics. Some of the carriers are paying upwards of $1.45 for every dollar they bring in. So that is not a sustainable business model in any industry. I don't care what industry it is. So, having those conversations and understanding why this is an issue and what the carriers are trying to do. And unfortunately, yes, it is affecting everybody across the board, regardless where you live, what kind of car you drive, your driving record, right? I mean, all that above. I have that. I've never had an accident. Why is my insurance going up? It's going up for everybody right now. So, just understanding this, trying to navigate it, and just being educated with what's going on is super important, and being prepared. And you and I here at Sky Insurance, along with our team, is really trying to navigate this the best we can for our clients and give peace of mind, because it is a very unique time in the industry, like you just stated, nationwide, not just California.
And I will add, if you can at all possible, like be the most vigilant you have ever been. If you have a traditional carrier, if you have something that's working for you right now, do not cancel. Do not get on non-renewal lists because you don't pay attention to forms that are being sent to you.
Yep.
Don't forget to pay your bill, things like that, where a lot of people are used to like, oh, it doesn't matter. I'm always late on my bill and they're going to reinstate. We have some companies right now that if you're late even one day, they're saying, we're sorry, you're in cancellation status. We're not going to reinstate your
Correct.
policy. So you've got to be so vigilant in keeping what you do have right now and not allowing yourself to be put in that situation where now you have to pay 5 times as much because
Yep.
it's canceled.
Yeah, we've seen that quite a few times here recently where, yeah,
I,
individuals
an
change their
enormous amount
banking
of
account,
times.
forgot to update us that, hey, I changed my checking account. It was on auto pay. So they just didn't think of it. It went into cancellation. Oh, let me give you the new bank information. This carrier will not accept you anymore. We've got to find a new carrier now. And like you said, it could be substantially more in the situation. So, like Aurora said, make sure you're staying on top of all of this. It is more important than ever when it comes to your insurance to make sure that it's staying in force and paid on time. Anything you want to close with this? I know we'll be doing more of these in the future as information continuously changes. But right now, information is king. And I know you and I are going to stay vigilant as far as being on the forefront of this and giving the community and our clients up to date information on what's going on in this marketplace. But anything you'd like to close before we close this down?
No, I mean, I always end any presentation that I do out there in the community on being your biggest advocate. So making sure that you educate yourself. Google is substantial with finding out information in regards to insurance coverage, what it means. Know that, especially with the California Fair Plan, you have to be very interactive with that. Don't allow an agent to just say, this is what you need, have them explain it to you, make sure that you understand what's going to pay out in the event of a total loss.
Mm-hmm.
Make sure that you know how much coverage you want for your personal belongings, things like that. So you really have to be engaged in this process if you have to go to the California Fair Plan to make sure you know exactly what it is and that you have everything that you need covered through that without allowing somebody to just default coverages for you, so that they can try to get you the lowest cost. Because if you have the lowest cost on a fair plan, it's generally because somebody has cut your coverage to do that. The fair
Yep.
plan's the same no matter what agent gets you. So make sure that you're just being your biggest advocate to protect yourself moving forward.
Great advice. Great advice. So I know it's not an easy time, you guys, but we're here for you and we'll continue to navigate this unique insurance world together. Have a great day.